You think the housing market is bad? Look at your driveway. In 2026, a Toyota Camry costs $770 a month to finance and another $250 to insure. That is over $1,000 a month to drive a Camry. We are seeing record repossessions, and here's the scary part. The banks are selling these cars for pennies. I'm Marcus, this is Macro Finance, and today we're opening the hood on the auto loan crisis, the one nobody is talking about. To understand how we got here, go back to 2021. Interest rates were near zero. Dealers were offering 0% financing. Supply chains were broken, car inventory was scarce, and used car prices shot up 40%. So people bought cars at peak prices with zero down at whatever rate they could get. Then rates went up. By 2023, subprime auto loan rates were averaging 9.5%. The same car, double the interest cost. And car insurance went up 43% since 2021 because everything costs more to repair. Now the average new car payment is $770 a month. 20% of new car buyers are paying over $1,000 a month, and millions of people are trapped.
Meet Jake. Jake is 32 years old, warehouse worker in Dallas, Texas, $48,000 a year, about $3,200 a month take-home. In 2023, he walked into a dealership. He saw a Ford F-150, $42,000. The dealer said, zero down, $770 a month. He signed. Here is what the dealer did not say. Terms: 9.5% APR, 72 months. Total paid $55,440 for a $42,000 truck. Insurance, $250 a month, $3,000 a year in Texas. Total cost, $770 plus $250 equals $1,020 a month. Total car cost, $1,020 a month on a $3,200 take-home salary. That is 32% of his income on one car. The rule is never spend more than 15%. Jake was spending 32%. For a while, it worked. He had steady overtime, income was closer to $4,000 a month. He made every payment. Then, early 2026, the overtime dried up. Company cut hours. Income dropped back to $3,200. He made January. He missed February. Called the lender, they said they'd defer. He missed March. The repo truck came on a Thursday night, took the F-150. Jake did not miss that payment because he was irresponsible. He missed it because his overtime disappeared. Jake is not alone. 5.60% of all auto loans 90-plus days delinquent. First quarter 2026, Federal Reserve Bank of New York. The long-term historical average, 3.59%. We are 56% above normal. And for subprime borrowers, people like Jake, the delinquency rate just hit its worst level in 32 years. 32 years. How many cars are being repossessed? 1.8 million vehicles this year, up from 1.35 million in 2023, a 22% increase in 2 years. Total auto loan debt, $1.67 trillion, 108 million open accounts. And the loans most at risk? The ones taken out in 2022, 2023, and 2024. High vehicle prices, high interest rates, no equity. Those loans are now aging into default. Senator Elizabeth Warren launched a formal probe into the auto lending and repossession industry in February 2026. The government is watching. 1.8 million cars this year alone being towed away. That is not a crash. That is an avalanche in slow motion.
Part 3. Banks sell for pennies. Here is what happens after the repo truck comes. The bank takes Jake's truck. sends it to auction. Jake still owed $32,400 on the truck. The truck sold at auction for $24,000. Jake still owes $8,400, even though he no longer has the car. That is called a deficiency balance, and it goes straight to a collections agency. The average deficiency balance is $7,500 to $12,500 on top of a destroyed credit score, on top of having no car. And do the banks profit from this? No. Banks only recover 45 to 72% of loan value at auction. On Jake's truck, they lost $8,400 too. This is a lose-lose. The borrower loses the car and still owes money. The bank loses thousands on the auction. Nobody wins. The bank took the truck. Jake still owes $8,400. The car is gone. The debt is not. Part 4. The ripple effect. Jake loses the truck on Thursday night. By Friday morning, he cannot get to work. In Dallas, Texas, like most of America, public transit does not serve a 5 a.m. warehouse shift. 3 weeks later, Jake is let go. The job required employees to have their own transportation. His credit score dropped over 150 points from the repossession. He cannot qualify for another auto loan, and even if he could, his insurance would be even higher now. He still owes $8,400 to the collections agency. They call every day. Cannot rent a new apartment, landlords check credit. Cannot get to a new job, no car. Cannot pay off the debt, no income. One missed car payment. 6 months later, unemployed, credit destroyed, housing at risk. This is the ripple. A repo is not just losing a car. In America, where you need a car to get to work, it's losing everything that follows.
Part 5. 5 rules before you sign. You cannot fix Jake's situation, but you can make sure it doesn't become yours. Rule 1. The 15% rule. Never spend more than 15% of your take-home pay on all car costs, payment, insurance, and maintenance. If your take-home is $3,200, your max total car budget is $480 per month. Rule 2. Maximum 48 months. Never finance a car for more than 4 years. If you cannot afford the 48-month payment, you cannot afford the car. 72 months means guaranteed negative equity. Rule 3. 20% down minimum. 0 down means you owe more than the car is worth on day 1. Cars lose 15 to 20% value in year 1. Rule 4. Used over new right now. Average used payment is $531 per month versus average new payment $760 per month. Saving $239 per month, $2,868 per year, makes mathematical sense at today's high rates. Rule 5. Calculate total cost, not monthly payment. $42,000 at 9.5% for 72 months equals $55,440 total, $13,440 in pure interest. Always calculate the end number yourself. The dealer will tell you what your monthly payment is. Nobody will tell you the total cost. That is the trap. The housing market gets the headlines. The auto loan market is the one actively hurting people right now. 1.8 million cars this year being repossessed by people who did everything they were supposed to do, showed up to work, made the payments, until the overtime disappeared. Know the 5 rules. Run the math before you sign. Hit like if you are currently paying more than $600 for your car. Subscribe because this system keeps setting traps. And comment, how much is your car payment right now? I'm Marcus. This is Macro Finance, and we will see you in the next trap.